Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about a new SPAC to the channel, and who'd have thought it? It's been a while since we've discussed SPACs on here, especially as most of them have fallen out of favour amongst investors, but this one's a bit different and it's worth a discussion. We're talking about Polestar and its announced deal with Gores Guggenheim Inc, trading under the ticker GGPI. Now this has been some time coming, but this week the definitive agreement was reached and we've learnt a bunch more about the company and about the deal. Now a lot has changed for SPACs in the last year and a half since we've been discussing them on this channel. They were a hot topic for investing in 2020, but have fallen out of favour a bit in 2021. This is basically due to the fact that too many SPACs were raised, too much capital raised via SPACs, and that was chasing just too few deals, and that ultimately led to very punchy valuations being paid for a number of target companies. And as a result of that, the impact being that many SPACs have had terrible stock price performance following the merger. So why are we talking about Polestar and the Gores Guggenheim SPAC then? Well, for me, personally, it has some characteristics which make it potentially one of the more exciting SPACs of this year. It has many characteristics which are good to see in a company which we invest into, and which have not been seen in many of the other SPACs we've seen this year. Of course, as with all investments, and especially SPACs, it's not without risk, but in this video we'll cover the main merits and risks of the investment, and then conclude with what I'm doing. Before we jump into it, please smash the like button. We don't do clickbaity videos or thumbnails on this channel as it's just misleading and not helpful for the investing community on YouTube. By smashing the like button, you let the YouTube algorithm know that it doesn't only need to promote the clickbaited content, and it's so helpful for the channel. If you're new to the channel, then make sure you're subscribed and check out the Patreon group for a whole load of other investing related content, including a new video series where we share the investing approach and strategies which professional investors take and which you can use to help you become a better investor. As always, I'm not a financial advisor. This video is purely for entertainment and education purposes only, but let's get straight into it. So firstly, before we dive into the positives and negatives, what is Polestar? The first important thing to note is that Polestar is an established automotive manufacturer. They've been closely connected to Volvo for a number of years and have recently entered the EV market with support from Volvo and Geely. Currently it has 2 vehicles in production and an exciting pipeline of upcoming new vehicles which are expected to hit the market over the next few years. I say this from first-hand experience in Europe, but Polestar cars are becoming increasingly common to see on the road. Whereas maybe 2 years ago they were pretty rare, today they're not uncommon at all, and certainly in London you probably see one for every 5 or so Teslas you see. So yes, they clearly are smaller, but the market share is growing rapidly. And it's not just London where this phenomenon is observed. Indeed, globally this is true as well, especially in Europe where they have good traction. In reality though, it is probably one of 2 or 3 EV manufacturers which has a truly global footprint. Now this is important and something worth keeping in mind for one of the points which we will discuss later on in this video. The next thing to discuss is the transaction itself. The SPAC merger values the company at around $20 billion. The existing Polestar investors will retain ownership of around 94% in the business, with the SPAC investors owning around 4% of the combined merged entity. There is a PIPE as part of the SPAC, which is made up of strategic investors. This is important as it's the PIPE investors which in many of the other EV related SPACs over the last 18 months have exited their investments as soon as they have been able to and as soon as the lockup has expired, which has then subsequently resulted in poor stock price performance from this point. This has typically been at the expense of many retail investors and is something which I have been covering and discussing on the channel for some time now. So, what are the key investment highlights and why would an investor consider making an investment into this SPAC? Well, for me, the first and one of the most important factors here which differentiates Polestar from its competition is its scale and existing capabilities. Polestar is one of very few EV manufacturers with automotive experience, mass manufacturing expertise and a global footprint, and this makes it truly differentiated. Other names you could include in this bucket would be Tesla and NIO. Now these are important dynamics to consider when it comes to valuation. The automotive heritage it has is also something which is important to keep in mind. It's a household name, and with that comes a degree of trust and reputation which is important. Compare that to a totally new manufacturer where it's harder to establish that same reputation and market presence. As well as being global in its footprint, Polestar also has over 300 full-time employees focused on research and development. These are staff who are developing new technologies, creating new IP, designing new vehicles, and other important innovative activities. New entrants to the market have to compete against this, which from a standstill is challenging, and they'll always be playing catch-up. This acts as a moat and is a competitive differentiator. Unless competitors can invest heavily into expanding their headcounts, they will nearly always be playing catch-up. The focus of the merits of an investment in Polestar are focused around competitive differentiation for me. The macro tailwinds and market dynamics are overwhelmingly positive. We will touch on these in a moment, but it would be very hard to dispute that the market would grow, so instead investors should be looking to understand which are the best competitively positioned companies to invest into to ensure that they will be one of the winners in the market over the coming years. From a macro dynamic perspective, it's clear the demand for EVs will continue to grow. The electrification of transport is something which is essential globally if economies are to meet their environmental targets which they've all signed up to. Increased electrification of transport will be driven by this dynamic, whether that's through tax breaks or incentives to consumers who buy electric vehicles, or whether it's through direct subsidies or contributions made by governments. That's putting forward only the reasonable economic arguments, ignoring the social and personal dynamics which may also encourage consumers to buy electric vehicles. Now, another important consideration for Polestar is its relative strength and growth in Europe versus its main competitors. Now, this is important as the infrastructure for electric vehicles is currently much better and much more widely penetrated in Europe than it is in other continents. Now, this ultimately could be reflected in stronger market growth in the EV market within Europe versus other markets, which, given Polestar's European strength, is a positive for the company and the stock. So all of this said, the most important takeaway here, however, is the implication this has on valuation. Clearly, the company is well positioned, has a strong differentiation and an established moat. All of this should be reflected in valuation. However, when contrasting the company to other EV SPACs, Lucid Motors for example, investors can develop a number of important insights. Lucid Motors is not yet producing at mass scale. It's a regional player and is focused on the luxury end of the market. Currently, Lucid is valued at around $40 billion, or in terms of a relative valuation basis, around 6.5 times its 2023 forecast revenues. This contrasts to Polestar, which is around 3 times its 2023 forecast revenues. For me, there is no justification for this discount in valuation for Polestar versus Lucid, and I see this as an important dynamic here. Either you're supportive of the sector valuations being much higher than traditional vehicle manufacturers, and you believe Lucid's fairly valued, and in that case Polestar is highly undervalued. Alternatively, you don't believe the valuations are reasonable, and you expect a correction across the entire market, and in that case, perhaps Polestar is either fairly valued or potentially a touch overvalued. Now, we will touch on where I sit on this spectrum shortly. So, next up, what are the main risks and concerns then? The main risks in relation to an investment in Polestar, as I currently see it, can be broken down into 2 main buckets. The first is related to the transaction, and the second is related to the company's performance. Let's run through the transaction-related ones first. When initially looking through the transaction information, the main question that stuck out to me was, why was this transaction happening? Now, I say this in the sense of, what is the need for the transaction to occur? In many other SPACs, it's really clear. They either need additional capital to expand, or perhaps the SPAC management team are able to bring significant operational value to the company. But this is not the case for Polestar. Clearly, capital is helpful to support accelerated growth, but the scale of the company, its large fixed asset base, and larger automotive manufacturer-related companies all ultimately mean that there are easier, quicker, and cheaper ways to access the required capital for that growth. Perhaps the liquidity event is helpful for some of the existing investors in Polestar, and perhaps the management team as well, but the rationale for this deal is a little less clear-cut than many others. Now, the next risk is clearly valuation. While on a relative basis Polestar is undervalued versus peers, there's no denying that this is a rich valuation for a company which barely has a history of being profitable at a gross profit level at all. It's not even profitable at an EBITDA level, and won't be for some time. As an EV stock, a sector where valuations are high, there is a chance that, regardless of being undervalued versus its peers, a correction in valuation could leave Polestar looking somewhat overvalued, especially if the valuation for EVs were to fall more in line with those of traditional automotive manufacturers. It would be a bit of an awakening for investors across the sector. As a high beta stock, any market correction would be particularly rough for Polestar, so this is worth keeping in mind. Investors who have a low risk appetite should tread very carefully here. Now, the final dynamic to discuss here is the market sentiment, partly related to the transaction with the fact that this is a SPAC deal, which have fallen from grace, as we discussed earlier, over the past year. But it's also related to the transaction in the fact that it's another EV stock. Now, whilst market sentiment is transient, or said differently, it's never permanent, it changes and evolves, this is still an important consideration for now. As an investor, you don't want to find yourself on the wrong side of this dynamic, as it can result in suboptimal returns or lengthened hold periods and make exiting a position more challenging. Now moving on to the company-specific dynamics. The ones which are most important to discuss here are firstly around the delivery of results. While the presentation outlines how Polestar will become EBITDA positive by 2023, the reality is that the market is highly competitive and this will drive increased pressure on gross margins and as a result, delay and limit the company's ability to generate positive EBITDA. The projections clearly form part of a sales document, so these are an absolute best case scenario. It's worth keeping that in mind. The impact of missing these results and the magnitude of this will drive the impact and how this affects the stock price. Investors definitely need to be awake to this fact and make sure they keep their eyes wide open. Now the other really important dynamic here to keep in mind is that the delivery of the plan, the growth of the company, and to maintain its market leadership position, Polestar is reliant on ongoing investment and capital expenditure. Complacency from the management team in this regard and failure to continue innovation and resting on its laurels could lead to Polestar falling out of favour. Now capital expenditure projections may be underbaked. The company needs to invest more heavily to execute its strategy, and this has an impact on cash, required funding, and ultimately valuation. Again, this is something which investors need to keep in mind. So, what am I doing? Well, currently the capital I have allocated within my portfolio to the thesis of electrification of transport and the energy transition is nearly fully deployed. For anyone who's watched this channel much before, you may know that I'm not a massive fan of investing in a specific manufacturer in a growing market like this, where the competitive dynamics and positioning are so fluid. I'm predominantly invested in charging infrastructure, battery metals, battery recycling, and battery storage. However, I do believe the valuation discount versus the other large listed EVs does warrant further investigation. I do think this will be an interesting canary down the mine for SPACs, as it will be interesting to see how the market reacts to this deal. In summary, I'm taking a very small position in Polestar. I'll closely follow the company and its developments with a strong focus on whether or not to hold the stock through the merger and ultimately what exit window I'm looking at in terms of this investment. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, then make sure you're subscribed. Check out the Patreon for other investing related content and the Discord group. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.